Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. It is Friday, May 8th, and you are tuned in to the Friday Chart Fix. Thank you very much for joining us. So we're going to start off with the S&P 500 high-low line because it held in March, did not turn bearish, and turned back up in April. Then we'll look at the S&P 500 equal weight ETF. It's lagging the S&P 500, but it is in an uptrend and it has a bullish continuation pattern working. And finally, we'll see that the strength we're seeing within the technology sector, it's not all related to the semiconductor industry group, which is leading the way, of course. We're also seeing breakouts in cybersecurity and cloud computing. So here's a chart showing the S&P 500 in the top window. We've got new highs and new lows in the middle window. This is for the S&P 500, and you can see new highs, the green bars, and then the negative side, new lows, the red bars. And then we have the high-low line below, and that's a cumulative measure of net new highs minus new lows. So this line rises as long as new highs outpace new lows. And when you see new lows outnumbering new highs, then this line declines as it did in April of 2025 there. So if we look at the high-low, the high lows in the middle window, we can see here that we had strength there in January and February with this indicator, the new highs exceeding plus 50 several times, even getting above 100. So the market was really doing good in January and February. And then, of course, in March, you can look up the S&P 500. You can see that the S&P 500 declined. It fell from around 7,000 to around 6,300, roughly 9%. And so that's a pretty good decline in the S&P 500. But then if we look at new highs and new lows, we can see that they were relatively even in March. Sure, we had some more new lows, but we also had new highs. So we didn't see a big expansion in new lows. A big expansion in new lows is when you go below 50. So if that indicator goes below minus 50, that shows a serious expansion in new lows that's more likely to happen in a bear market. But we didn't get that. And then you look here in April, you can see new lows dried up a bit, and we saw an expansion of new highs with a move above 50 in mid-April. Then if you look at the high-low line, all it cares about is that new highs outpace new lows on a regular basis. And that means it rises. And I got a 20-day EMA to define that rise. And as long as you're above that 20-day EMA, this line is rising. And you can see it turned up on May 2nd. It rose throughout 2025 and accelerated there in January, February, and then flattened in March. So that's basically when new highs and new lows are roughly equal. We're not seeing a big expansion of new lows, basically. And flattening is okay. And then you can see it turned back up here. It didn't break below the 20-day EMA, and it turned back up in April as new highs started to outpace new lows again. So this line is telling us that new highs are still outpacing new lows, and we're still in a bull market, or at the very least, there's a bull market somewhere, and we got to go out there and find it. So SPY, QQQ, and the tech sector are clearly leading the market, especially with this big surge in April. All three hit new highs. The technology sector, it accounts for 36% of the S&P 500. So that is more than a third of the S&P 500. And if you want to know basically how the average stock in the S&P 500 is doing, you need to look at an equal weight version. And that's why we're going to look at RSP here, the equal weight S&P 500 ETF. And if you look at the sector holdings, you can see technology is around 16%. So that's less than half of what it accounts for in SPY. So this is a much more balanced S&P 500, if you will. And you got industrials and finance coming in around 15.5%. Healthcare, consumer discretionary coming in around 9 to 11%. And so this is an idea, gives you an idea of what's happening with the average stock and with the average sector, if you will, within the S&P 500. So we can see we're still in an uptrend here. We had a big decline in March, and we did break the 200-day for a couple days, but this really reversed sharply. And then we had this breakaway gap there on the 8th and the move back to the February high. We don't have a new high yet, and that is why RSP is lagging the S&P 500. But it's in an uptrend. It's above the rising 200-day. It's near a new high. And if we look at the pattern that's taking shape, we can see it's an inverse head and shoulders. We got a little left shoulder there in February, a deep dip for the head in March, and then we have the right shoulder taking place here in April, May, and a break above neckline resistance at 205 would signal a continuation higher. Now, there's also another pattern you could see. It would be a cup with handle. So if we start here, there's the cup, there's the handle. That's also a bullish pattern that was popularized by William O'Neill of Investor Business Daily. And if you break out there, that signals a continuation higher. And if we do get a breakout, that's going to show that the rally is broadening, and that would be a positive for the stock market. As far as the long-term trend is concerned, you got a lot of support in this 187, 193 area. So if you break 187, that would reverse this long-term uptrend. Now, if you're looking for quicker signals, you can use RSI ranges. We've got some pink shading that shows a bearish range. Blue shading shows a bullish range. And you can see here, 40 to 80 is basically my bullish range here. So when you break above 60, you move into this bullish range, and you stay into that range until you break below 40. And when you break below 40, that shows you're in the bottom half of the RSI range, and that is more negative for momentum than positive, if you will. And we stayed negative until April 14th when we got above 60, and we're currently bullish on momentum. But if we go below 40, that would be the first sign that momentum is turning for the S&P 500. Now, as with all indicators, you're going to get whipsaws. Nothing is perfect, and you're going to get some decent trends. Here we got a decent trend from the middle of May until the middle of October. You can see here that October, November, you got some whipsaws. So you might put a filter on this, make it cross above 60 for 2 days, 3 days, or make it cross above 60, 61 even, just to give it that little buffer on your signal. But it's just to give you an idea of which way momentum is going. And right now, momentum favors the bulls as far as these RSI ranges are concerned. So April was a huge month for the NASDAQ 100 rotation strategy at TrendInvestorPro.com. And that is because the rotation strategy was holding a number of semiconductor stocks, especially those memory stocks like Micron and Western Digital. This is the home page at Trend Investor Pro, and there you can see the strategy updates through 2026 and the compound annual return. And I'll go to the current signal page table so you can see what we're holding now. So if I go up to the top of the page, this is a members only page, the signals and ranking tables. And if I scroll down, there's the NASDAQ 100 ranking table, signals and portfolio. And we've been running this strategy since November of 2024. And if we look at the current holdings, there you can see we've got Intel, Seagate, Western Digital, Micron, Ross even snuck in there, Alphabet, Warner Brothers. It's going to go off in a little bit because it's a takeover, and Lam Research. So very heavy in semiconductors. So it's been a banner month for this momentum rotation strategy. And there you can see the ranks on the right there. So check out TrendInvestorPro.com if you're interested in a rotation strategy trading NASDAQ 100 stocks or S&P 500 stocks, and we even have one for ETFs. So we all know that semiconductors are surging to new highs with a massive move in SMH and SOSX, and the AI ETFs are surging, AIQ and ARTY. But it's not just the AI complex that's moving higher. We also have breakouts and big moves in cybersecurity and cloud computing. Here's a cybersecurity ETF, and we can see it peaking there in October. It looked like a normal correction into December, but then the bottom fell out there with that sharp decline into February. Things started firming here in March and April, and then we got this opening Morobozu candlestick here. And it's called an opening Morobozu because a Morobozu candlestick does not have any upper or lower shadows. But this one has a small upper shadow and no lower shadow, which is where the opening is. That's why it's called an opening Marubozu, according to Candlestick Charting Explained by Greg Morris, his book. So we can see here, we have this huge move up and we hit resistance and then we followed through, and that's important. We got follow through after this opening Marubozu, and this is basically an outsized advance. It's a big advance that's like a rocket lifting off. We got follow through here with a breakout, and we're up again this week. So there's a breakout working in cybersecurity. It may be short-term overbought. If we look here, broken resistance going to turn into support. So maybe if you get a throwback to that 68 area, that might give another chance to partake in the uptrend. If we look at the price relative, you can see cybersecurity was underperforming with that November, December breakdown and fell really sharply into February, firmed, and then got the breakout here. So we see a return to relative strength in cybersecurity. Here is the cloud computing ETF. And again, we can see a peak there in October and a decline, and then a really sharp decline into February. Started firming in March and April, and we got that opening Marubozu candlestick there, and we broke out on that big surge above 115. And not only did we have the big surge and breakout, but we had follow through. So this is bullish. This is a trend reversal here. We're short-term overbought after a move from 105 to 129. The breakout zone turns first support. So if you get a throwback into this 115, 120 area, that's an area to watch for support and a possible continuation higher. And if we look at the price relative, we can see that we have a breakout there, and that shows a return to relative strength for cloud computing. So if you like this report and this video, check out TrendInvestorPro.com, because we put out reports and videos 3 times a week, Tuesday, Wednesday, and Thursday. We cover equity-related ETFs on Tuesdays. Then we have some stock setups on Wednesdays. We got a materials stock that is leading with an uptrend. We got a biotech breakout and a solar stock with a momentum thrust and breakout. And then we cover what I call asset class ETFs on Thursday, and we're seeing precious metals set up as well as uranium with a bull flag. So check out TrendInvestorPro.com to learn more. All right, so that is it for today's report. Thank you very much for tuning in, and have a great weekend. Take care.